Assalamualaikum warahmatullahi wabarakatuh. Good morning, guys. Let's introduce myself. My name is Wanti Nawangsari. You can call me Wanti. My student ID number is 94. I'm from class A. Here, we will discuss about tax and taxation in business and tech case study at PT.Cakrawala. Happy watching! There are several points that we will discuss. In this occasion, among others, 1. Definition of tax and tax functions. 2. Kinds of tax. 3. Tax relation with business. And the last, the 4, is example of the application of taxes to companies. Number 1 is definition of tax. According to Mardiasmo 2016, taxes are contributions paid by the people to the state which are included in the state treasury which implements that law, and its implementation can be forced without any remuneration. General definition of tax. Tax are compulsory public contribution to the state treasury which are compelling in nature for a fee that is not directly filled by the public and is used for the purpose of states. The next point is tax function. There is 4 functions of tax. Number 1 is reception function. Number 2 is function settings. Number 3 is redistribution function. Number 4 is function of democracy. Tax function is a source of fund earmarked for financing government expenditures. In the tax, state budget is a source of domestic revenue. Function setting. Tax serves as tool to regulate or implement policies in the social and economic field. For example, PPNBM for hard and minimum other luxury items. Number 3 is redistribution function. In this redistribution function, the elements of equalization and justice in society. For function can be seen from the tariff layer in the imposition of tax with a higher tax rate for higher income. And the last, number 4, is tax in democratic function are a system of mutual comparison function. This is associated with government service to paying public tax. So, we will conclude that the taxes have several functions, including the reception function, regulating function, redistribution function, and democratic function. Okay, next we will discuss about kinds of taxes. There is 5 kinds of taxes. The one is income tax. Number 2 is value-added tax or VAT. Number 3 is sales tax on luxury goods. Number 4 is stamp duty. And number 5 is land and building tax. Okay, we will discuss. Number 1 is income tax. Income tax is a tax imposed on an individual or entity on income received or earned in a tax year. Such income can be form of business profits, salaries, honoraria, gifts, and so on. Kind number 2 is value-added tax or VAT. Is a levy charged for the sale and purchase of goods and service carried out by personal taxpayers or corporate taxpayers who have become taxable entrepreneurs. Number 3, sales tax on luxury goods is a sales tax levied on luxury goods transaction, both domestic and foreign. And the last is stamp duty, is a tax imposed on the use of documents such as letters of agreement, notary deeds, payment steps, and securities containing a nominal amount of money above a certain amount and condition. And the last, land and building tax, is a tax imposed of ownership, utilization of control of land or buildings. Tax relation with business. Number one is the tax that determines of final value on the amount of profit to the company. Direct tax bonded are generally borne in entities that earn or receive income. The tax imposed of the company's income earned is considered an expense that must be paid in carrying out business activities. After tax deducted, economically, it's in a deduction for exciting profits. The company profit that has been deducted by tax will be shared or reinvested by the company. In the business world, entrepreneurs' identity more with paying taxes as a burden, so that entrepreneurs will try to minimize the taxes paid so that the amount of profit obtained is more optimal. Number two is companies implementing tax planning in the tax management. In the practice of the business world, tax management is carried out by companies as a way of fulfilling tax obligation properly, and the taxes paid can be reduced as low as possible to obtain the expected profit. Tax management begins with tax planning. Tax planning is still based on the regulation but is different from the goals of regulators. Economically, the step is to maximize income after tax so that the company remains profitable. Number three is what's the truth to not being taxes. It is possible that if a business has never been taxed, the business actor is do not understand where the efficiency of company spending lies. If it gets late, what will happen is what's in all business processes, which can actually be efficient if carefully studied and planned. Number five is encouraging companies to become big. If your company is taxed and processed to become normal business, then your company can arrange payment to banks. This step will make it easier for your business to run from being a medium-sized company and becoming large and professional. The last point is underpayment of the corporate injury tax. If in all of its business activities, the company pays less than a lax amount of tax, it will have a bad impact and injure the image and reputation of the company has been built. An effective way to anticipate this not to be more careful in preparing your business financial report. Okay, the last we will discuss about examples of the application of taxes to companies. The title is The Analysis of Implementing Income Tax in Construction Service on PT.Cakrawala. PT.Cakrawala is a private company in the city of Manado. PT.Cakrawala is a company engaged in construction that stand or that March 28. 2003. Number 5 with Notary Grace Deborah Cassenger SH. TV Addressable Horizon in the Banjar Village, Tikala District, Manado City. This company is engaged in the service construction. PT.Cakrawala has implemented income tax in accordance with exciting regulation, which every time there is acceptance for the work done directly earned income. Income tax Article 23 is collected by the withholding treasurer, but has not implemented in the recording of Article 23 income tax in accordance with the applicable regulations. In addition, JV Horizon has undertaken tax obligation in connection with the construction service provided by JV Horizon is subject to Article 23 income tax at a rate of 2% because it fits with the income tax law Article 23. The tax rate for the construction service is 2% of gross income. Income tax Article 23 is not paid directly by TV Horizon but collected by the cutting tracer as the service user or party employer. Well, that's the material and case study about tax and tax law in business. Hopefully, it is useful for all my friends and can add to your knowledge. Sorry if there is an error. And the last, I say thank you. Assalamualaikum warahmatullahi wabarakatuh.